All right, so today we're going to be taking the deep dive into Hindustan Unilever's second quarter results for fiscal year 2025. We've got their investor presentation and the press release right here with us, ready to really unpack what these numbers mean. And, forget just skimming the headlines. We're really going for that in-depth understanding here.
You are going deep. And what's fascinating is that HUL is demonstrating growth. Even amidst what can only be described as, a complex economic environment in India right now, their strategic focus on premium products, their commitment to innovation, and of course that hefty dividend payout to shareholders are some of the things that I'm really interested in.
Okay, so before we get lost in the weeds of the numbers, let's zoom out a bit and set the stage.
Yeah.
The presentation mentions moderating urban growth, rural areas that are recovering slowly, and we've got those rising prices for commodities like tea and palm oil. I mean, that's got to create some headwinds for a company like HUL, right?
Oh, absolutely. Those are significant challenges for any consumer goods company, let alone a giant like HUL. But, taking a step back and looking at the overall picture, HUL achieved a 2% underlying sales growth. We'll call that USG from now on, just for simplicity, and a 3% underlying volume growth. We can call that UVG. So essentially, they're selling more products even with these obstacles in place. And here's a number that really jumps out at me, a 23.8% EBITDA margin. Now, EBITDA is essentially a measure of profitability, and that figure, that is really impressive.
Yeah, that's a healthy margin for sure.
Mm-hmm.
Now, something I noticed in the report was this term intrinsic figures. They use it alongside the regular reported numbers. They also mentioned a one-time tax benefit from last year. Can you break this down for us a little bit? Why are there two sets of numbers?
Yeah. So you've got a good eye for detail there. Essentially what HUL is doing is they're trying to provide investors with a clearer picture of how the core business is actually performing, separate from any of those, sort of unusual events that might have occurred. Think of it this way. The reported figures are the whole picture, warts and all, but the intrinsic figures, well, they kind of give you a peek under the hood. They let you see how the engine is really running. And intrinsically, their USG, their UVG, and profit growth are all stronger. They're all hitting that 3% mark.
Okay, so they're giving us the raw numbers and then the sort of adjusted numbers to give a clearer picture of the trends. Got it. So let's dig into some of those individual segments now. Home care is clearly the star performer here. 8% growth with a big jump in volume. What's fueling that success?
It's all about those liquid products. Their liquid portfolio actually saw double-digit growth. That's significant. Consumers are really gravitating towards products like liquid detergents and cleaners. And on top of that, they've launched some really innovative products, like the Vim Pro Floor Cleaner and Comfort Beads, which is a brand new format of fabric softener. This is HUL really putting their premiumization strategy into action, offering higher-end products that have added benefits and tapping into these new, rapidly growing segments.
Yeah, it's smart. They're going where the growth is and offering something new. Speaking of premiumization, though, beauty and well-being had more modest growth at 1% in the reported figures, but I think you mentioned 7% intrinsically. What explains that difference?
You're right on the money. Remember that one-time tax benefit we discussed earlier? Well, that's the culprit behind the discrepancy in the numbers. If you look intrinsically, this segment is actually performing quite well, fueled by strong volume growth. Hair care is doing exceptionally well, and their premium skincare lines are gaining traction as well.
Interesting. So they got some momentum in that segment. And it can't all be good news, right? Personal care actually saw a decline, and it seems like that's mainly because of those price increases. Does this point to some weakness in that area, especially since foods and refreshment also had a slight dip?
It's not necessarily a sign of weakness. What HUL seems to be doing is playing it strategically. They're focusing on maintaining profitability rather than chasing volume in what's honestly a tough market right now. Think of it this way. They'd rather have a good profit margin than get caught in a price war with competitors. Now there is a bright spot in personal care premium body wash. That category is seeing double-digit growth. And in foods, while they're holding their own in a challenging market, they're even strengthening their market share, even though revenue dipped slightly. What I find interesting is that niche segments like food solutions and mayonnaise are actually showing some real promise.
Okay, so they're being strategic in a tough market and still finding those pockets of growth. Makes sense. Okay, we can't ignore the elephant in the room any longer. That massive dividend payout of INR 6,814 crores. Can you put that in perspective for our listeners?
Yeah, it's like HUL is throwing a huge party for its shareholders. It's a sign of confidence in their future prospects. And remember, this is on top of already solid performance. This isn't a company that's struggling. It's a company that's sharing its success.
Sharing the wealth. So they're feeling good about the future. Well, let's look ahead then. What's HUL saying about the rest of fiscal year 2025?
Their outlook suggests that they anticipate demand to remain pretty stable, but they're also taking a more measured approach to growth. It seems like their motto is slow and steady wins the race, at least for now. They'll likely continue to prioritize profitability over aggressively pursuing those big sales numbers, especially with all of the economic uncertainties we've talked about. They're also really committed to their net productivity program, which is a fancy way of saying they're laser focused on keeping costs under control and operating as efficiently as possible.
All right, so they're playing it smart. They're focused on profitability and efficiency in uncertain times. And of course, rewarding those shareholders. Sounds like a solid plan.
Yeah, it's definitely a prudent approach given all the uncertainty in the market.
Right, it's like battening down the hatches and weathering the storm. But while they're laser focused on profitability, how are they thinking about competition? You mentioned growing market share, but the world of fast-moving consumer goods, I mean, it's incredibly dynamic. So how are they staying ahead of the curve?
Innovation is key, and HUL is doubling down on it. They're not just, tweaking existing products or making minor improvements. They're diving headfirst into entirely new categories and formats, really trying to anticipate and meet those ever-evolving consumer needs. A great example is the launch of Comfort beads. It's a completely new concept in fabric softeners, these little beads that slowly release fragrance over time. It's generating a lot of buzz.
Oh, yeah, I've seen those. I'm always a sucker for trying out new things like that.
Yeah.
They also highlight their winning in many India's strategy. Can you tell us a little bit about what that actually means?
Yes. This is where things get really interesting. HUL recognizes that India isn't a homogeneous market. Consumer preferences vary widely depending on the region, income levels, lifestyles. So they're taking a very granular approach, tailoring their products and their distribution strategies to these diverse segments. It's like they're not just selling products, they're trying to understand the pulse of different communities across India.
That's fascinating. So they're hyper-local in their approach. Now, they also spend some time talking about sustainability and their net productivity program. Are these just corporate buzzwords, or is there some real substance behind it all?
No, I'd say there's some real meat on the bone here. HUL has become increasingly vocal about their commitment to sustainability, and they're integrating it into every aspect of their operations, from sourcing raw materials responsibly to minimizing packaging and water usage. Their net productivity program isn't just about cutting costs, it's about doing more with less.
Okay, so they're walking the walk, not just talking the talk, which is great to see. And of course, they're investing heavily in digital transformation as well. What's the logic behind that?
Well, it's all about future-proofing the business. E-commerce is exploding in India, and HUL wants to make sure they have a dominant presence online. They're also using data analytics to gain deeper insights into consumer behavior. Think personalized marketing campaigns, optimizing their supply chain, even experimenting with new business models like direct-to-consumer platforms.
Wow, so they're really covering all the bases. So back to those impressive results for a minute. What really stood out to you when you dug into the numbers?
Their performance in the home care segment was truly remarkable. They're absolutely crushing it there. It seems their strategy of offering premium products in that category is really resonating with consumers. They've tapped into this growing segment of consumers who are willing to spend a little bit more for quality and convenience.
It's like they found that sweet spot between affordability and aspiration. Now, they're not without their challenges, are they? Are there any areas that you think raise a red flag?
The decline in personal care, even if it's a strategic move, is something to keep an eye on. It's a major category for HUL, and if those declines continue, it could definitely impact their overall market share. Also, their reliance on rural markets, which are still recovering, makes them a bit vulnerable.
Right, so they need to keep a close eye on both of those areas.
Yeah.
Okay, so we've covered a lot of ground. Overall performance, individual segments, challenges, and opportunities. What's your overall takeaway? How healthy is HUL right now?
I think they're demonstrating resilience and strategic thinking in a pretty complex business environment. They're achieving growth even when things are challenging. They're keeping those profit margins healthy, and they're making smart investments for the future. But as with any business, there are always going to be those challenges and uncertainties.
It's like they're navigating uncharted waters, but they've got a good compass and an experienced crew. Now, while HUL is clearly rewarding those shareholders with a big dividend, what about their future? Will these current strategies be enough to sustain growth over the long term?
Yeah, that is the question, isn't it? Especially with the economic uncertainties that we've been talking about.
Absolutely. It's a bit like, trying to predict the weather. You can analyze the patterns, make an educated guess, but there are always those unexpected turns. And the FMCG sector is so fascinating because it's so closely tied to consumer behavior, which can be influenced by so many different factors.
Right. It's like a mirror reflecting all those changes happening in society.
Mhm.
So what is that reflection telling us about India right now?
Well, HUL's success, particularly with those premium products, is definitely telling. It indicates there's a growing segment of Indian consumers who have more disposable income. They're not just looking for basic products anymore. They're seeking out higher quality convenience brands that align with their aspirations.
It's not just about owning something fancy, though, right?
Yeah.
It's that whole experience they're buying into.
Exactly. HUL has spent decades building these strong, trusted brands. And they're really smart about leveraging that brand equity to create these aspirational brands that resonate with consumers. Think about their marketing campaigns, their digital presence, their focus on creating that seamless experience, whether you're shopping online or in a physical store. They're hitting all the right notes.
And they're not afraid to make those tough calls like raising prices to protect their margins.
Oh, absolutely. That takes some serious courage. It shows they're prioritizing long-term profitability over chasing those short-term gains. They're willing to accept a slight dip in market share if it means maintaining healthy margins. And they can reinvest those profits into strategies that are going to drive sustainable growth in the long run.
Yeah, it's a delicate balancing act for sure. But what about those external factors that could throw them off course? What are some of the things that you think could impact HUL's performance over the next few quarters?
Well, government policies and regulations are always a bit of a wild card. Any changes in taxation, import duties, those things could have a direct impact on their costs and pricing strategies. And of course, we can't forget about the competition. The FMCG sector is incredibly competitive, with both local and international players constantly fighting for market share.
Yeah, it's a battleground out there. And then there's the ever-changing consumer. What's hot today could be old news tomorrow.
That's the challenge and the excitement of this industry. Companies need to be nimble, adaptable, constantly innovating, and trying to anticipate those shifts in consumer preferences. And I think HUL is doing a good job on that front so far, but they can't afford to become complacent.
Right, they got to stay on their toes. So for our listeners who are interested in investing in HUL or just, curious about the company, what's the bottom line here? What should they be thinking about?
I'd say that HUL is a solid company with a proven track record. They've got a diverse portfolio of brands, a clear vision for the future. They're navigating a complex landscape pretty effectively, but like any investment, there are risks to consider.
Makes sense. There's no such thing as a sure thing.
Right.
Do you have any parting words of wisdom for our listeners as they continue their own deep dive into HUL?
Yeah, don't just focus on the numbers. Take the time to really consider the broader economic context. Study HUL's strategies, compare their performance to their competitors. And always remember, past performance doesn't guarantee future results. The FMCG world is constantly changing, and so is HUL.
Wise words. Well, that wraps up our deep dive into Hindustan Unilever's second quarter results for fiscal year 2025. We covered a lot of ground, from financial performance to strategic moves to the road that lies ahead. Remember, this is just the start of your own research journey. Keep exploring, stay curious, and as always, happy investing.